Rose Jacobs here with you for Kalkine TV. Today we're going to look at investing tips for beginners. But first, make sure you press the bell icon for all the latest updates here on Kalkine TV. According to legendary investor Warren Buffett, investing is putting money towards something now for you to receive more money in the future. Indeed, the whole purpose of investing is to put money into some type of asset which will reward you in the future. But how do you start and where do you start? Well, here are 9 tips to help you if you're a beginner investor. Firstly, number 1, you need to know your reason. Before beginner investors even get started, they should know why they are investing. To use a simple analogy, it's easier to shoot at a target when you know what that target is. There are countless financial goals, and everyone should tailor their goals both towards their own financial situation and their desired outcome. Tip number 2, keep reading and keep reading. This tip is one of the many skills a person may aspire to have. Again, this should be done before the actual investing even begins. Some great books to read on investing include Robert Kiyosaki's Rich Dad Poor Dad, Grant Sabatier's Financial Freedom, and for the millennials, Erin Lowry's Broke Millennial. Tip number 3, research the stock before buying. You would be surprised how simply understanding a stock before you sink all of your money into it will put you ahead of the pack. While researching is no surefire way to succeed 100% of the time, in fact no such way truly exists, it does increase your chances of succeeding and it gets you way more familiar with the market. Tip number 4, get familiar with the prospectus. The information provided in a company's prospectus is extremely valuable, and learning how to read one will help you immeasurably in the long term. Familiarising yourself with the prospectus will teach you what to look for so that you can efficiently read a prospectus in a shorter period of time. Tip number 5, choosing stocks. A long-term investor will likely choose different stocks than a short-term investor. For long-term investing, however, diversification is vital. An investor with 10 carefully chosen stocks will have a portfolio with considerably less speculative risk than buying 3 shares. Tip 6, put in the work and reap the rewards. Investing with little work and research is not much different to betting on a horse. Resist anyone trying to sell formulas or software designed to predict the market. Tip 7, learn to detach from emotions. While it isn't necessary to separate yourself entirely from your emotions, it's certainly necessary to be able to control them. This applies to both positive and negative emotions. Number 8, be aware of the behaviour of other investors. When too many people are feeling positive about the economy and the market, it may be a good time to turn defensive. On the other hand, when there's a lot of fear and perhaps tentativeness in the market, it might be time to buy up. And finally, tip number 9, never panic. The worst thing an investor can do when they're losing money is panic. It develops if you pay too much attention to what the media is saying about stock markets amid a negative market sentiment environment. If you feel inspired to sell through panic and not rationality, you should probably hold. So they are just 9 tips to help a beginner investor to get started. Remember to do the work and stay informed. And that is it for today's video, but if you like what you've learned, then don't forget to like, share and subscribe, and of course go to kalkinemedia.com for all the latest. I'm Rose Jacobs and I'll see you next time.